back. It's good to be back for another week of real estate talk. And today's topic is going to be talking about title insurance. Obviously, I get a lot of questions about title insurance from my clients because it's kind of one of those things that becomes an expense many times in a transaction, and people wonder why they're paying for it and do we really need it. So there's a lot of different questions about it, and we're almost in our society insuranced beyond measure. We have health insurance, we have auto insurance, we have workers' compensation insurance, we have goods and services insurance. For instance, if if you drop your cell phone and it breaks, you can go back and get them to repair your cell phone because you have equipment insurance, you have disability insurance. So we're insured beyond measure sometimes it feels in this country. And then you go to buy a home and you're approached with being told that you should or need to get title insurance depending on the type of transaction that you're in. And it makes you wonder sometimes, is this just another one of those scams? Most of us have insurance and never use it. I guess probably the most common insurance that does get used is probably auto insurance from accidents and comprehensive claims. But title insurance is insurance that is meant to protect you in case of errors in title when you take possession. It also can protect your lender. So for instance, let's start off talking about a cash transaction. So let's say that you're a cash buyer and you decide that you want to buy a home for $100,000, and you make your offer on the property. There will be what is called, at least in Arizona they use it on all transactions, there will be what's called an owner's policy. Now the owner's policy is title insurance to protect the buyer. So typically in a transaction, the owner's policy is purchased by the seller in this case. So you as the buyer would not have to pay for the owner's policy. It would be provided by the seller in the transaction, and typically it's called a standard insurance policy. And what will happen is that the title company will issue a preliminary title report. It's a report where they pull information that is known on title, and they use this preliminary title report for writing exemptions or exclusions to your title policy. And so your title policy will cover any errors that the title company makes in not identifying known liens on the property. So let's say that there's a property tax lien on the property. Title company misses it. The transaction closes, and now all of a sudden you've bought the property that's supposed to be free and clear of liens, but you'll have a claim because there's an underlying lien that the title company missed, and that would be a charge against the title policy, the title insurance policy that you took out. Now this could also happen, for instance, if there for some reason is maybe a improper deed conveyance, right of way, or those type of things that again should have been known to the title company and was missed and wasn't disclosed in the title report, and you took title expecting it to be free and clear, and subsequently you find out that somebody has an interest, whatever that ownership interest is in the property, against the property, then you would have a claim against title insurance in order to try to make you whole. It is possible that the only way that title can make you whole is to refund your money at some point and reimburse you for the amount of money that you were out. And so title policies are typically written for the amount of the transaction. So in the case of a buyer's policy, you're buying the house for $100,000, the policy would be written in for $100,000. Now, you can buy extended policies which cover some things that a standard title policy doesn't, and there's just no way we can get into all of that today. But one of the good things is when you are in a transaction and you have a title company, you can ask the title agent to explain to you the different coverages and the different policies that are available to you. So the title company will help you with the basically insurance policy that you're receiving. Now, if you're financing the transaction, gone out and gotten a loan, you're going to have a second policy on this property. The seller is still going to buy an owner's policy, but you, as the buyer, are going to be responsible for buying a lender's policy, and that policy protects your lender. The owner's policy will protect you. The lender's policy will protect the lender. And just like in the cash transaction, you can buy either the standard policy, which covers the standard acts, omissions, and errors, or you can buy an extended policy, which will cover some extended and not very common potential events. And again, your title company is the one who is involved in this process in the transaction. So between you, your realtor, and the title agency, you should be able to get your questions answered with regards to title insurance. Now, in the transaction, the title company is going to issue you a preliminary title report. This preliminary title report is going to disclose to you the potential risks that they've found on title, and it'll be the basis for any exclusions that may be in there. For instance, there may be an easement to the property or over the property, and that easement may be an exclusion to the title policy because it's a known right that somebody has to it, and they're not going to protect you against somebody exercising their right to that easement. Now, the third type of situation or transaction that title insurance should be considered for is in the event of a trustee sale. So let's say that you decide that you want to go down to the trustee sale and you want to bid on a property and buy it out of trustee sale. Now, what a lot of people don't understand is that if they buy that property, they are buying it with all underlying liens that are not cleared by the trustee sale. So for instance, in a trustee sale, typically it'll clear any first liens or second liens on the property or third liens on the property, but it will not remove property tax liens. It may not remove a mechanicsman's lien. It may not remove a right or interest somebody has that is below or supersedes the rights that the trustee has. And so in this case, you should be working with a title company if you're going to buy at trustee sale to get a title report run, or at least a preliminary title report run on the property. Now, it's going to cost you a little bit of money, but if you're spending $100,000 at the trustee sale and you have to spend $150, $200 on a title report that can make you aware of underlying liens that you may have to subsequently either pay off or deal with, or somebody else may have a priority right to you in, it's very well worth it. So title insurance can be very important in order to not only protect you, protect the lender, but obviously to keep you out of litigation and ongoing headaches and problems in the future. All right, I want to stop here for just a second and invite you to send any questions or comments to me. I look forward to getting those each week, and it gives us something for our second segment to talk about and to answer, because obviously if you have a question, somebody else may be dealing with it. So send those questions to radio@rescottaz.com. That's radio@rescottaz.com. And so we'd love to have your questions about any area of real estate, and we will try to answer them on one of our programs. And if we cannot do that, we will certainly respond to you by email so that you get answers to your questions. All right, so what I want to talk about then is a little bit about trustee or title companies who will be acting as escrow agents in the transaction. And there are a couple different things that you need to consider with regards to title companies. And first off is the title company a local company? What I mean is, do they only have maybe 1-2 offices? They're a small title company. They don't have extremely strong financial backing. This is very important if you're buying an upper end house. Let's say that you're spending $500,000 or $1 million on a home, and the title company that the seller wants to use, and maybe your agent wants to use, is a local company with 1 or 2 offices. The question is if there is an event and they have to pay that claim, do they have the financial strength to do so? That is always a question that you need to consider, because what you don't want to find out is that the company, though they wrote the title policy, does not have the financial resources in order to pay a claim in case you have an event or a claim against them. If you're buying a $50,000 house, I would imagine that you're probably not going to have a problem. But it's really with the upper end houses, the local title companies can be something you need to consider. In the transaction, if they make an error, it could be financially devastating to you. All right, we're up against the break. When I come back, finish up for a couple minutes on this topic, and we'll be right back.